So the next asset correlation pairing we'll take a look at is Bitcoin and gold. So one of Bitcoin's appealing fundamental traits is its limited supply, where only 21 million Bitcoin will ever exist and will ever be produced. And the production of Bitcoin continues to decrease over time due to the halvening protocol. We'll talk more about that in just a little bit. Basically, it's encoded into the Bitcoin software where over time, the amount of Bitcoin created will continue to decrease and diminish to preserve its value and its locked in state of only 21 million Bitcoin in existence. Right now, there's about 18.9 million, so there's still about 2 million Bitcoin still left to be created or still left to be mined. But this figure will continue to diminish over time along with the rate that Bitcoin is created at. Now, these factors or these fundamental traits have given greater weight to the claim that Bitcoin is digital gold. And just to compare side by side between Bitcoin and gold, we saw that we know that gold functions as a stable store of value. Bitcoin is said to act as a store of value and will stabilize over time. This is something that remains to be seen. Once again, Bitcoin has only been in existence for about 12 years, whereas gold has been used as a store of value for hundreds, if not thousands of years. We also see that gold functions as a hedge against inflation, whereas if the purchasing power of a currency or if a government currency decreases, the purchasing power and the store value of gold will increase because it will cost more dollars or more of that currency to purchase the same amount of gold. Now, Bitcoin is also said to act as a hedge against inflation. We have seen this perform in 2021 and into 2022, but whether or not it remains to be said or remains to hold strong as a hedge against inflation remains to be seen. Once again, it's still an infantile and maturing asset class. We also see that gold is hard to produce and has a limited supply increase schedule. According to the World Gold Council, about 2,500 to 3,000 tons of gold is produced a year, and this is a general global economy where much of it is produced in China, South America, and is very spread throughout the world. Bitcoin is also hard to produce as well and has a limited supply increase schedule, which we'll take a look at in just a little bit. Now, Bitcoin is produced through crypto mining. It's hard and it's expensive to do so. It requires expensive equipment, large amounts of expensive equipment, requires facilities to house the equipment. It requires large amounts of power to power the equipment, and there's no guarantee of being successful at actually mining the Bitcoin. Now, next, we're going to compare the performance of Bitcoin versus gold over the same time period, starting in 2015. So just to recap, here are the estimated halving dates and rewards. So halving protocol is the coding within the Bitcoin software that ensures that only a certain amount of Bitcoin are created and that there will only be a set amount of Bitcoin in existence, that there can only be 21 million Bitcoin. And so these are different cycles or sections within the halving protocol. After every 210,000 blocks or 210,000 blocks of transactions added to the Bitcoin blockchain, a halving cycle occurs. So, and what this essentially means is that the block reward, which is the newly created Bitcoin that's awarded to the miners, this is cut in half. So starting from the estimate date, let's say maybe about 2009 or 2010 is really when Bitcoin network came online. So this would be considering halving 0, block height 0. From its creation, we saw that the early Bitcoin miners were rewarded 50 Bitcoin per block successfully added. So you can think of it as 50 Bitcoin added per transaction. So if you were mining Bitcoin, you are processing transactions, and if you are successful, you receive 50 Bitcoin. Now remember, at the time, Bitcoin was worth maybe cents. It wasn't worth $60,000 per Bitcoin. So it was a gamble to spend that much amount of processing power, devoting your computer, your electricity. It was a bit of a gamble and an investment to do so without any promise of reward. And we saw that after each of these block heights, after 210, 420, 630, 840,000, 1,050,000. Currently, we are in halving 3. We 2 years ago, we have observed this block height. So we've reached the 630,000 block height. 630,000 blocks or transactions have been added to the Bitcoin blockchain. And here, currently, the block reward for every Bitcoin transaction added is 6.25 Bitcoin. And this will be cut in half once we reach 840,000 block height. Okay, blocks added to the Bitcoin blockchain. This is estimated to occur in about 2 years, so about in 2024. We'll have to see whether or not that will occur and what happens to Bitcoin's price once the block reward is cut in half once again. Now, to compare Bitcoin's performance to gold. So in this chart, we are observing two lines. The blue line is Bitcoin. The orange line represents gold. And the right side scale is the price for Bitcoin, whereas the left side scale is the price scale for gold. So generally, we do see, arguably up until 2020, not a lot of correlation. This does line up with the Bloomberg study and the VanEck studies that we previously saw before. Following 2020, we do see generally gold dramatically increasing in value, particularly around June, July of 2020. At this point, Bitcoin did produce some price action relative, but not as severe upwards. It was really after this point gold starts decreasing in value, whereas Bitcoin dramatically increases in value. So here we start to see a negative correlation, particularly in this part from, we could say, June or July into 2020, the beginning of 2020 to the end of the year. At this point, we do see lower highs, lower lows in gold, whereas with Bitcoin, we're starting to see this euphoric rise upwards and producing new all-time highs. Now, looking forward throughout 2021, this negative correlation would continue to hold true. Taking a look here, this is a particular moment. Bitcoin is coming down. This is about quarter 2 2021. This coincides with the Bitcoin mining ban in China and the dramatic loss in overall capital invested in Bitcoin, the market crash, if you will, in May. Bitcoin falling from about 60,000 to a low of about 35K, give or take. During this same time period, we see Bitcoin dramatically falling, gold increasing. Now, the rate of change is not equal, but we do see that as Bitcoin is falling, gold is increasing in value. And we do see the same in the inverse. Gold falling in value, Bitcoin starting to increase in value. Gold increasing in value, Bitcoin falling in value during the same time periods. Really only here we do start to see a positive correlation to some degree, where Bitcoin's going up, gold is going up, Bitcoin's going down, gold is going down. But we do start to see a shift in overall momentum, particularly going into 2022. Gold is going up in value, Bitcoin is falling in value generally. Now, we're going to specifically focus on the Bitcoin to gold relationship in May 2021. Bitcoin suffered severe losses during this time period, once again due to the previously mentioned Bitcoin mining ban and other factors, including Elon Musk stating that Tesla would stop accepting Bitcoin payments, citing environmental issues regarding mining, the Chinese crypto mining ban, and the U.S. government and entities, governing bodies such as the SEC and the Federal Reserve announcing the need for more crypto regulations. Overall, this is bearish news. This is news that could scare potential investors or scare current investors. Now, while Bitcoin and the crypto market as a whole suffered losses, physical gold exchange traded funds, ETFs, saw its strongest months in May 2021 since September 2020. We start to see increases of inflows into these gold ETFs. U.S. based gold ETFs saw an inflow of about 2.1 billion, while European gold ETFs reported 1.6 billion inflows during this time period. This coincides with the observed increase in gold valuation in May and June 2021, which we saw before. Here is a ETF flow chart, a flow of dollars into gold ETFs. This is a source from Bloomberg, various financial analytic companies, and also the World Gold Council. Particularly here, falling from, even going before that, here we saw going into 2020, we did see gold ETFs seeing strong amounts of inflows, particularly from North America. This coincides with the COVID-19 pandemic onset and the economic crisis that would unfold in March and in April. Gold is steadily increasing in value during this time of fear and uncertainty. And in terms of value, and overall in terms of ETF inflows, more people are sending their gold in. This trend would reverse going into the summer, let's say around July into August, September. We're starting to see decreases in the amount of money inflowing into these exchange traded funds, and overall decreasing valuations of gold as well. Gold would slowly decrease, generally maintaining this value of heightened valuation compared to the pre-pandemic levels, right? But still generally lowering from its peak observed in June, July, and August 2020. We see negative flows, valuation flows out of the gold ETFs, indicating that people are taking their money out, and there's a negative net loss of the money invested in gold ETFs, particularly here. So here we start to see this shift in May 2021, where gold is starting to turn around. Gold is starting to turn around in terms of valuation and turn around in terms of ETF investment flows, which is starting to become positive again. There's more money being invested into these gold ETFs at the same time that Bitcoin was crashing in valuation. So here we really see a true analysis of this inverse correlation between gold and Bitcoin. So just to recap, the data shows that there is a negative correlation, at least in the short term, focusing on Q1 and Q2 2021 between Bitcoin and gold. We saw gold ETFs see 6 months of back-to-back outflows, money leaving these investment funds until May 2021, where the sudden reversal coincides with Bitcoin's volatile price collapse. People were leaving gold for Bitcoin. There are many claims that Bitcoin would act as a superior hedge against inflation, or a superior hedge of a superior store of value, essentially. And we do see this negative correlation. If money is leaving Bitcoin, we're seeing increases into gold. If gold is decreasing, we're seeing increases into Bitcoin. Another thing to note is that JP Morgan analysts in January 2021 reported that gold ETFs lost about $7 billion in the same time period that the Grayscale Bitcoin Trust, which is a fund that tracks the valuation of Bitcoin, that particular trust increased by $3 billion in the same time period.